I yield to our ranking member, Mr. Neal, for his opening statement.
Thank you, Mr. Chairman, and I'm pleased you called this hearing to examine the 2011-2012 tax extenders. However, I should note my frustration that Congress has once again allowed so many of these important tax provisions to expire. I'm also discouraged that we're now just examining the 2011 extenders, even though they expired several months ago. Important principles of tax policy are certainty and predictability. We need to remember these principles as we deal with the tax extenders. Many of the tax provisions that expired in 2011 are priorities of mine. For example, New Markets Tax Credits and Build America bonds are very important. The New Markets Tax Credit is designed to stimulate investment and economic growth in low-income communities that are traditionally overlooked by conventional capital markets, and we've seen the result in all of our districts. In Western Massachusetts, local New Markets Tax Credit success stories include small businesses like the River Valley Market in Northampton and the Massachusetts High Green Performance Computing Center in Holyoke. We need to extend New Markets. Another provision that is very important that expired last year is the 15-year depreciation schedule for leasehold improvements, restaurant improvements and new construction, as well as retail improvements. Mama Iguana's is a restaurant that opened last year in Springfield and took advantage of this provision. We need to extend this 15-year depreciation provision and eliminate any tax law prejudices against retail store owners. It's also absolutely essential, as you have noted, Mr. Chairman, that active financing rules of Subpart F, which expired at the end of last year, be extended as well. This is an issue that the two of us have worked on, and a bipartisan majority of this committee has co-sponsored this legislation to make the rules permanent. The active financing rules are not a special incentive. Rather, they allow U.S. banks, insurance companies, and finance companies to apply the regular United States tax law, allowing for the deferral of U.S. taxes on active foreign business income. And speaking of Subpart F, another important provision that we need to extend is the look-through rule. The R&D tax credit is a huge priority for many of us in Massachusetts. In fact, Massachusetts is ranked third in the country in terms of the number of companies in the state reporting R&D activity. The R&D credit must be extended. Another extender that is important to Massachusetts, the 2012 AMT patch. About 975,000 families in Massachusetts, including 80,000 in my district in Springfield, will be hit with AMT if we don't enact a patch for 2012. A few additional extenders that are extremely important and should be continued are Section 25C, which is a tax incentive for the purchase of energy-efficient improvements to homes. Section 181, which is effectively a limited form of bonus depreciation to encourage domestic film production and job creation. The extenders related to regulated investment companies, or RICs as they are called as well, and the enhanced charitable deduction for contributions of inventory. In terms of the 2012 extenders, we also must extend Section 127, which allows an employee to exclude from income up to $5,250 per year for tuition assistance from their employer. Furthermore, the production tax credit for onshore wind and the investment tax credit for offshore wind are important as well, and I hope both will be extended. I'm pleased you've called this hearing this morning, and I look forward to the testimony that we are about to receive.
Thank you, Mr. Neal. As I sit here listening